How to raise capital like a billionaire. You have the idea, you see the opportunity, you know there is a market, and you can already see what the business could become. But then comes the question every ambitious entrepreneur eventually faces: where will the capital come from? Because building a great business isn't only about having a great idea. It's about knowing how to turn an opportunity into something investors want to put money behind. And this is where the game changes. Billionaires don't simply look for money, they know how to attract capital. Let me ask you a question. If you have $1 million business idea, but only $1,000 in your bank account, does that mean you cannot build the business? Not necessarily, because some of the biggest businesses in the world weren't built entirely with the founders' money. They raised capital. But here's where most people get it wrong. They think raising capital means finding someone with money and convincing that person to give it to you. That's not how sophisticated capital raising works. Billionaires don't simply chase money. They build opportunities that make capital want to come in. So in this video, we're breaking down how to raise capital like a billionaire, how to position the opportunity, reduce investor risk, create value, and make capital want to participate. And if you're serious about understanding how wealth is built, subscribe to Wealth Forge so you don't miss the next video where we'll build on this and go even deeper into how capital actually moves. So, how do you raise capital like a billionaire? Let's get into it. 1. Stop asking for money. Start selling an opportunity. This is the first mindset shift. Imagine you walk into a room and say, "I have a great business idea. I need $500,000. That's a request. Now imagine saying, "We've identified a market worth billions. We've already acquired our first customers. We've proven demand, and we're raising $500,000 to expand into 3 additional markets." That's an opportunity. Same money, completely different proposition. Investors aren't simply asking, "Is this a good idea?" They're asking, "What happens to my money if I put it here?" That's why sophisticated entrepreneurs don't sell desperation. They sell possibility backed by evidence. 2. Make your business less risky before you ask for more money. Here's something many entrepreneurs don't understand. Capital becomes cheaper when risk becomes lower. If you have an idea and nothing else, an investor has to imagine everything. Will customers buy? Can you execute? Will the team work? Will the market grow? Can this business actually make money? But if you've already tested the product, generated revenue, built a customer base, or demonstrated strong demand, you've removed some uncertainty. You haven't eliminated risk. You've simply made the opportunity easier to believe. And that changes the conversation. Instead of saying, "Trust me," you're saying, "Here is what we've already proven." That's a much stronger position. 3. Understand what investors are really buying. Here's a question worth asking. When an investor gives you $1 million, what are they actually buying? They're not buying your PowerPoint presentation. They're buying a claim on future value. And that means you need to understand your own economics. How does the business make money? How large is the market? How much does it cost to acquire a customer? How much does that customer generate? What are your margins? How quickly can the business grow? And perhaps most importantly, what could this business eventually be worth? Because investors aren't philanthropists. Even when they believe in your mission, they are still thinking about risk and return. So if you don't understand how your business creates economic value, why should someone trust you with their capital? 4. Don't raise money just because you can. This one is important. More money doesn't automatically mean a better business. If you raise $5 million without knowing how to deploy it, you've simply created a more expensive problem. Smart capital raising begins with a question. What exactly will this money accomplish? Will it build a factory? Hire engineers? Acquire customers? Enter a new market? Purchase equipment? Develop technology? Acquire another company? Capital should have a job. Because investors aren't simply funding your ambition. They're funding a plan for turning capital into more value. 5. Learn the difference between types of capital. And this is where things get interesting. Not all money is the same. You can bootstrap. You can raise money from friends and family. You can approach angel investors. You can seek venture capital. You can use bank debt. You can bring in strategic investors. You can raise private equity. Each comes with different expectations, risks, and consequences. Debt gives you capital without necessarily giving away ownership, but it creates repayment obligations. Equity doesn't require the same type of repayment, but you give investors a stake in the business. So the question isn't, where can I get money? The better question is, what kind of capital makes sense for what I'm trying to build? That's how sophisticated entrepreneurs think. 6. Build credibility before you need capital. Here's one of the biggest secrets of fundraising. The best time to build investor relationships is before you need their money. Why? Because trust takes time. Investors want to know who you are. They want to understand your thinking. They want to see whether you actually execute. They want to know whether you understand your market. So don't wait until you're desperate for $2 million before you start talking to potential investors. Build relationships early. Share progress. Build your network. Understand the people who invest in your industry. And when the time comes to raise capital, you're not walking into the room as a complete stranger. You're walking in with credibility. 7. The biggest secret: capital follows momentum. Now here's perhaps the most important lesson. Capital loves evidence. A founder with an idea is asking investors to believe. A founder with customers is showing evidence. A founder with revenue is showing more evidence. A founder with strong growth is showing even more. And a founder with a proven business model can attract entirely different conversations. This is why sometimes the hardest money to raise is the first money. Because you're starting from zero, but once you create momentum, capital can become easier to attract. And this creates an interesting paradox. You often need capital to grow, but you need evidence of growth to attract capital. So, what do? You prove as much as you can with the resources you already have. Build the prototype, get the first customer, test the market, generate the first revenue, demonstrate demand, create evidence, then use that evidence to raise the next level of capital. That's how you turn a story into an investment case. The billionaire mindset. So let's bring everything together. Raising capital like a billionaire doesn't mean pretending to be a billionaire. It means thinking differently about money. Don't ask, who can give me money? Ask, what valuable opportunity am I creating? Don't ask, how do I convince investors? Ask, what evidence can I produce that makes the opportunity easier to believe? Don't ask, how much money can I raise? Ask, how much capital does this business actually need, and what will that capital produce? Because the most sophisticated capital raisers understand something very important. Money is not the destination. Money is the fuel. The real objective is to turn capital into productive assets, productive businesses, and ultimately more value. And that is why the wealthy don't just think about income. They think about ownership. They think about leverage. They think about capital. They think about scale. And they think about how to make other people's capital work alongside their own. So if you have a business idea and you're sitting there thinking, I don't have enough money to start, maybe the better question isn't, how do I find the money? Ask, what can I prove before I get the money? Because the more you can prove, the more credible your opportunity becomes. And the more credible the opportunity becomes, the easier it can become to attract capital. That's the real lesson. Billionaires don't simply chase money. They build systems, assets, and opportunities that attract money. If you found this useful, subscribe to Wealth Forge. Join the 1% who don't just want to make money, but want to understand how capital actually moves. Because here, we don't just talk about wealth. We study the machinery behind it. This is Wealth Forge. Subscribe now and see you in the next.